Good morning. It is July 30th, and Amazon just reported numbers. I'm going to go through the technical analysis and a few fundamental factors in this video. Stay tuned. So Amazon, which was in a breakout pattern prior to this morning, just reported numbers. Now listen, Amazon has got numbers that are blowing things away more than any other company I've ever seen. I'll give you an idea. I'm just going to read this because this is something that I posted a little bit earlier today. In 2010, for this quarter, the second quarter, Amazon did $6.6 billion. $6.6 billion. Big number, right? If you look at what it did last night for this quarter, 2021, $113 billion. This company is growing by leaps and bounds. Why? They're providing something that makes things easier for us. In fact, it's had growth from 6 to 9 to 12 billion, 15, 19. They're growing by 3 or 4 billion every quarter, year over year. It's amazing when you actually think about what Amazon does. When you look at the screen, and this is a MarketSmith screen, so thanks to those guys for doing such a great job. You can look over here on the left side, and you can see what they've done. In 2014, they were money losing, right? They were losing 52 cents. Then they finally started to make money in 2015. Everybody finally said, oh, finally they're making money. They were just putting all this money into R&D and building their fortress, right, their foundation. And now you can see it. It went from 4.655 to 20 to 23 to 41 to 55 to 73. It's crazy. And this is just earnings per share. Okay. So last night, and I'm just going to generalize the numbers because the numbers actually don't matter. They blew away earnings per share. Blew away. I mean, isn't that what a company is supposed to do? Be profitable? That's what they did. They're profitable. And instead of doing on revenues 115, which was the expectation that the street had, they did 113. So they missed those expectations, which isn't even a real number. It's a fake number made up by a consensus of analysts. They did 113 billion. So why is the stock down 300 points this morning? Well, it's because next quarter they said, things might be a little lighter. People are going back to work. They're not sitting at home and they're not ordering as many things online. So maybe we're going to be a little bit lighter. All right. That's the story. That's what they tell you. Let me tell you what I think is really happening. Okay, and if you watch me, you know that I'm a Wall Street guy because I came from Wall Street, but I'm also an anti-Wall Street guy. So here's what happens. A company like this, all of the big market makers want to own. Why is that? Well, market makers want to own them and big institutions want to own them because if they own them, think about an individual that's trading on Wall Street. If you buy a stock and you can buy it at a discount and you can make 7% on it, let's say, you get a great big bonus at the end of the year. If you can make money for your firm is going to pay you fat. Okay? And that's what these guys are driven by. They're greedy. They're humans, just like you and me, right? So if they see a money-making opportunity, they're going to take it. Now, if you're a little more sinister, you start to realize these guys are all buddies. What do you do for a living? I'm a trader. Oh, yeah? Who? Merrill Lynch. Yeah? I'm a trader at Morgan Stanley. Oh, yeah? Let's have a beer. They go out and have a beer. What are you buying? I'm buying Amazon. What are you buying? I'm buying Amazon too. Cool. What do you think is going to happen with numbers? I don't know. What do you say we try to make a couple of big bonuses here and we'll make it seem like the stock's going to go down and fear all the little people out of it? How are we going to do that? Well, I don't know. I don't know what happens behind the scenes. I can just tell you that it's such a temptation. And when I used to work on Wall Street, it was happening. People were out there having their martinis together. They're in the same business. They start to align on driving things up and down if they don't get caught. So they have secretive language and stocks go up, stocks go down. And they pretty much know they go up and down before they know it. Okay. So Amazon today, looking at the chart, is going up as a long-term trend. Look at this chart, right? But if you start to look at Amazon as a longer-term trend with a short-term blip, you start to see that things aren't so rosy, right? Just today. So look at this gap down here. You see that big gap down? Gap downs are bad, right? Gap downs are bad. So you can see right now the stock is showing down $277. Well, that's bad. Why do you think that's down to $277? Well, you see these two little red lines? Well, this red line and this black line. This red line is the 50-day moving average, and the black line is the 200-day moving average. Those are the two most followed technical indicators on Wall Street. And you can look at a chart and you can see when it crosses through the black line or the red line, it tends to keep going in that direction. And sometimes it just follows around that line. But generally, that moving average is pretty indicative of what the stock is doing. And the same thing is true here in Amazon. So Amazon breached its 50-day moving average. It's going to do it on monster volume today. It's going to probably go down and bounce off the 200-day moving average. And that's when all these guys on Wall Street go, oh my God, I've got a position in Amazon. You too? Let's hold it up. Where are we going to hold it? Well, let's try to get it back to the 50-day moving average. Oh, maybe we'll let it bounce at the 200-day moving average first, and then we'll buy it back to the 50-day moving average. And we're getting a 7%. It's down 7%. We're getting a 7% discount to do it. So we'll scare Aunt Susie out of all her stock, let her think the sky is falling, when we really know that Amazon continues to blow away earnings and continues to blow away numbers, and we're going to be fine as long as we keep buying this thing. So let's all buy it together. What do you say, guys? Here, I'll buy the next round. And they buy that stock up at a discount, and the stock goes up 7%. And in December, they all get a nice check and go to the Hamptons for their bonus, and they celebrate that they're such great traders. That's kind of what happens. All right, maybe I took some liberties of kind of what happens and how they do it, because I don't know exactly how they do it. But I can tell you there's games being played on Wall Street. There always have and there always will. Why? Because they're human beings, and human beings are greedy. And if you can make some extra money for yourself by using your firm's money, first of all, and by manipulating a system somehow, using information that most people don't have. So I'm not saying this is happening. I'm saying there's a chance this could be happening. Now, you get to decide if it's happening. You could just look at all the stocks and how they're kind of, I don't know, if you look back, you could see it's almost predictable what happens. So what is Amazon going to do? Well, I'm going to go back to the weekly chart. And when I look at Amazon growing at 78% or average earnings per share growth rate, or I see it putting down earnings growth like this, or sales growth like this, up 27%, 44%, 37%. I mean, come on, these guys are growing, and they said it on the call yesterday. They're growing at about 25% a year. All right, even if it's 10% a year, like 10% growth is pretty darn good, right? And so if you look at this, you had a beautiful AB leg here from 1,600 all the way up to about 3,400, okay? What's that? About 1,800 points, okay? Then it had a long consolidation here, and it's generally making cause to go from this $3,000 level to up about 1,800 points from there, which to me looks like it's going to go to about $4,600, $4,700, $4,800 is the target price. When you look at what the street is saying today, because they're all coming out and looking like heroes and saying, we reiterate our target price on Amazon. BMO reiterates their target price. UBS maintains a buy on Amazon, lowers target to 4,020. Why would they say 4,020? Credit Suisse on Amazon, Raymond James on Amazon, outperform rating. Piper Sandler maintained it with an overweight. So they're all coming out with their little predictions, and they're all about over $4,000. So you can look at it two ways. Number one, they really care about us, and they want us to know what their great research has told us the stock is going to go to. And they may be right, and that may be their motivation. Or they want us to think that that stock is going to go there so we don't sell. And so they can make their bonuses. So you don't think these research departments are working hand in hand with the trading departments? They used to, but they supposedly got separated by what they call the Chinese wall on Wall Street about 25 years ago. Are they really separated? I mean, those research people they work for the same company. Don't you think they all want to be in business next year so they all get their fat bonuses? So come on. So they're coming out saying, hey, we're still at 4,000, even though the stock's at $3,300 today. Buy it, it's at 4,000. And they want you to stay in it. So they scare out the little guys, buy up their stock, and want you to stay in it for the long term, because they never tell you short term it's going anywhere. They want you to stay in it for the long term, and so you continue to buy it. We've had a $4,400 target price on it. Anyway, I'm giving you my target price, and I have no axe to grind. I have no research department. I'm telling you what I think technically the charts are saying. This stock is going to about $4,600 to $4,800. That's how I look at Amazon. Don't freak out. It's a one-day operation. It's down $300. Could be a buying opportunity. I never buy on days after numbers anyway. But it could be a buying opportunity over the next couple of weeks as the stock bounces off its 50 or its 200-day moving average. Don't say I didn't tell you so a year from now when the stock is at, I think, 46 to 4,800. Listen, do your own research, seek out your own advice. Don't do anything because I say to do it. Be careful. The market is very dangerous, but this is the way I read Amazon, and it's just an opinion. Hope you take it to heart, and I hope it works for you. See you later. By the way, if you want to learn more, if you want to join some of my ecosystems, we have books and courses and masterminds and mentorships and all kinds of really cool things to get the probabilities in your favor. You know, I help wealthy investors play offense and defense by creating safe, reliable income. But it all comes from a system, guys. It all comes from a system. And if you want to learn to do anything right, you've got to have a system. It can't just be, I watched a YouTube video and now I'm going to go throw my good hard-earned money. You need to learn a system. And I've been doing this for 44 years, and I think I got some really cool programs for you to learn. Anything worth doing is worth doing right. You might as well learn it right. You might as well put the time and effort into something that's going to make you money for the rest of your life. Go to one of my sites. The main one is called hackingmoney.com. You can click there. You can go to the products tab. You can see what we have to offer for you so that you can take your trading to the next level. And maybe I'll even see you at one of my events. In any case, I hope you join one of my ecosystems, and I hope we see each other down the road.